Aaron here from the Bitcoin Bros, coming back at you with another video. We got the opportunity to interview Hillery from MicroStrategy True North. We talked about strategy, some of their products, including Stride, Strife, some of the Bitcoin treasury companies, what Dan thinks about all this. Highly recommend you guys check out Dan's Twitter page. He has a lot of useful information regarding strategy and their products. You can follow him on Twitter right here. Also subscribe and like to our channel. We have new content coming out every single day, and we have more interviews coming in the future, so make sure to subscribe for that. Let's go ahead and check out this interview, and highly recommend you guys watch this one to the end. We're going to get into strategy and Bitcoin, but we want to know, have you looked into some of these other Bitcoin treasury companies, like Metaplanet or any of the other ones? And what are your thoughts on any of them? Are you investing? Are you staying away? Are you just focusing on strategy and all their products? What are your thoughts there?
Yeah, I'm a pretty much a strategy Bitcoin guy, but a lot of that's for tax reasons. But just because I don't want to, realize too many gains. However, with the other ones, it's really interesting to look at the kind of structure of the reverse mergers, which a lot of them undergo. So Metaplanet's different, right? Metaplanet has kind of an origin story, much like strategy, where there wasn't a reverse merger pipe investment into an existing public entity takeover situation, right? It was just a hotel business that then was desperate during COVID and started, adopting the Bitcoin treasury strategy. So there weren't kind of inside investors that are incentivized to sell upon, full realization of that exit liquidity. Whereas with a lot of these other companies, there are kind of incentives for insiders who got really good terms when they entered the pipe, which is a private investment in public equity. So they got really good terms entering the deal. And when the company or the public investment IPOs, they essentially become liquid on a huge amount of unrealized gains. And so that brings a lot of sell pressure in the market. So when these reverse mergers happen, you have to be really careful with kind of the dynamics in the market, because there's a lot of incentivization for selling, right? If you're a pipe investor, you're up 10x on one of these on your investment, you're not going to sit there and hope it goes up another 10x. You're going to turn around, you're going to put your short position on, even if there's a lockup period, you're going to sell the stock short, reap your gains, lock in your gains, and you're going to tell your investors like, hey, 10x, like let's do this. So that's kind of, you have to understand the real deal structure of the different businesses before you hop in. But that's to say, I think all Bitcoin, a treasury made up of Bitcoin is a very, very valuable asset for any corporation.
So we'll sort of pivot from there and get more into, what MicroStrategy's been developing and some of the vehicles they have on that side of the fence. So let's start with Strike and Strife. On the value of those two vehicles for like principal appreciation, you emphasize that you hold Strike not primarily for its yield, but for its potential principal appreciation. So especially over the next 16 to 18 months, if interest rates remain flat or decline, can you unpack the specific market conditions or catalysts beyond interest rate movements that you believe will drive this appreciation? And
Totally.
to piggyback on that, how do you assess the trade-off between both of these fixed dividend yields?
Yeah, just for reference, are you guys real estate guys? You guys are like real estate, like, are you ex-real estate guys that kind of got into Bitcoin? Or are you guys like diehard Bitcoiners from the start?
We've been Bitcoiners for about what has it been, seven years now? So yeah, Bitcoin.
Okay, you're diehard Bitcoiners. I just saw that last question. I was like, oh, are these guys? But you're totally right. You framed that last question really well in this question here, and I think we'll get into it later. That like Strike and Strife are really an attack on both the fixed income markets and the real estate markets, and I think it's going to draw a lot of capital away from those, income producing investments. But to answer your question, so Strike, Strife, why do I hold them for principal appreciation? Well, the main reason is simply because I think the market doesn't quite understand the products. And there's a couple different things at play here, right? To even believe Strike and Strife are valuable, you have to believe that Bitcoin is a durable asset that isn't going to go to zero. So if you believe that, then you can start to enter into the realm of understanding or investing in Strife and Strike. The thing about Strife and Strike is that you're actually not making, well, Strife in particular, you're not making a directional bet on Bitcoin. Your investment is over collateralized by Bitcoin about 10 to 1 on Strategy's balance sheet. And so there's a whole host of terms that explain what you'll be owed in the case of Strategy's insolvency, how much of their Bitcoin you'll be owed. Essentially, right now, the liquidation preference is $100. So if you own one share of Strike sorry, excuse me, Strife, Strife is let's use the term crown jewel. So in Strategy's capital stack, they have priority is the convertible notes. Those are senior, those are private placement. As a retail investor, you can't really access them other than the ETF BMAX. Okay, next is Strife, and that's the 10% fixed coupon perpetual preferred. And that is kind of their most secure, most over collateralized Bitcoin backed instrument. So if you own one share of Strike, you're entitled to $100 of Strategy's Bitcoin in the case of their liquidation, and a $10 annualized coupon. So every year you get $10 for every $100 of Strike you own in quarterly coupon payments, dividend payments. And this is really atypical in the market, right? So because it sits at the very top of the capital stack, it's again 10-to-1 over collateralized by existing assets in the balance sheet. And right now the yield on Strife is about 10%, right? That's just where the market's pricing it. And this would be a kind of C-rated distressed bond level yield. However, this bond is effectively 10-to-1 over collateralized, not by future cash flows like most corporations, but by existing assets on the balance sheet. And it's easy to track that over collateralization by looking simply at Strategy's capital structure, which is present on their website and in their quarterly reports. So there's actually a huge amount of security in owning Strife relative to other fixed income products. And the market's pricing it like some sort of high risk, almost bankrupt, foreign bond. And I don't believe that to be the case. So if you think these credit instruments are credit worthy, then you would own them with the idea or the belief that the principal will appreciate. And for anyone who doesn't know how these things work, so the yield on Strife is $10 per year, right? And Strife trades at a dollar value, much like an equity, like any equity, right? So right now it's trading at $100. So every year you get paid $10 in dividends. That's a 10% yield. If the market believes it's a very safe and secure sort of fixed income bond or preferred equity, then they're going to price it up. So the price will appreciate from $100 to $150. And at $150, the yield on Strife, that $10 yield, will be closer to 6.5%. And that 6.5% yield is kind of where I believe it will start being. That's more of a AA rated bond. That kind of yield. So that's a 200 basis point credit spread, and I think it'll trade closer there to that price in the near term. The near term being 1 to 1 year, a little bit plus, maybe more than 1 year, but who knows?
You had mentioned that the market hasn't really fully ingested, let alone what these vehicles are that sailors develop, but the value of Bitcoin. You would think that'd be the case, seeing what MicroStrategy or Strategy's done over the past 4 or 5 years by simply just putting Bitcoin on their balance sheet. Mm-hmm. So when do you think that cascade event's going to happen? Where right now we're getting a small subsection of the overall, private markets, public companies to put Bitcoin on their balance sheets or start their Bitcoin treasury. When do you think that event's going to be when it's from a small percent to 10%, 20%, or just a standard of having Bitcoin on your balance sheet? Do you think that's going to be another cycle from now, or are we going to just see it ramp up over the next 12 to 24 months? What's your thoughts on that?
Yeah, I think it's going to be slow. I think it's going to be slow because there's going to be negative. There's going to be a bear market at some point. That may be in 2027, maybe in 2026, maybe in 2028, maybe tomorrow, maybe had started today. I don't know, but there's going to be real fallout for a lot of these companies that think they don't have to have an operating business and they can just lever up on Bitcoin. And so you could argue that Strategy doesn't have a meaningful operating business, but I'll get into that later. I think they have a monopoly on the Bitcoin-backed fixed instrument market. But there's going to be some fallout of people just boosting their valuations because of they can inject Bitcoin into a publicly traded micro cap reverse merger stock. I don't think that means Bitcoin on the balance sheet is a bad idea or it will go away. I think Bitcoin on the balance sheet is here to stay, but it's going to take a while, like anything, for companies and corporations to adopt it with, corporate governance structures, all kinds of things. So I think it's going to take longer than we think. I think it's going to take longer than we think. But I do foresee a future in which, Bitcoin in a treasury makes a ton of sense. Much like the analogy I use is, most companies hold treasuries on their balance sheet, but most companies aren't banks. And so that's the way I think about strategy in other companies using Bitcoin treasury strategies.
Answer. I want to get back to Strife a little bit. So I think you said if Strife trades up to 150, it would become like AA rated, and the yield will go down to 6.5%. So is that why they're doing like Stride, because Strife is becoming more legitimate of a product and still being able to offer that higher yield? Is that why they're doing that? And then if that is true, is the reason, I mean, if they continue to do that, are we going to continue to see more and more of these fixed income offerings in the future? Is that something that you think about? Or
I think that's a really good question. And yeah, so Stride is their most, okay, so I messed up my wording a little bit there. So if the free market assigned Stride's value, if it pushed the price of Strife up to $150 and it was yielding 6.5%, that means it's equivalent to a AA rated bond. However, none of Strategy's products are rated currently, and the ratings would come from an auction house like Moody's or Standard & Poor's. And when they rate a credit instrument, that's usually how the yield is determined in the fair market. And so right now, there's no rating on Strategy's debt instruments. Maybe if they get included in the S&P, that will advance that process. I'm not sure. That aside, Strife, the way it's constructed, is highly, highly secured. It's highly, highly over collateralized. So Strategy's designing it to have a much lower yield than a product like Stride. And so Stride, for me, it totally changed my thesis around Strategy, and it made me a lot more assured for a lot of different reasons. But Stride is essentially a junk bond, you can think of it, whereas Strife is the most senior over collateralized, worst case scenario, you get paid out bond. And so they sit in different positions in the capital stack. So they have different hierarchies. So it's convertible notes, Strife, Strike, which is the convertible preferred stock, and then Stride. And I don't know if you saw today, but Stride was 4 times oversubscribed in their IPO on Fidelity. So there's going to be $1 billion of that issued in the coming month.
Yeah, we did. We spoke on that right before you joined.
Cool.
So as far as when it comes to Stride and Strike, the way, I think about Strife is more operating like, a high yield savings account, if you may. And then, Strike, they give $8 a share, but there's a convertible upside there. So that's definitely advantageous for, some investors. And then we just sort of briefly spoke about Stride. When it comes to your investment thesis, how would you say you're positioning yourself across these 3 products, and how maybe a newer investor that's just getting started, should they be looking for more volatility and just buying the common A shares, or should they be positioning themselves? I know age probably has a lot to do with that, and also how much their net worth is as well. But how do you process stepping through your investment thesis with these other vehicle offerings now?
I think that's a really good question, and something people have to think about. And so Strife, I think you said it perfectly, right? It's a high yield savings account. And where we are today, there's a lot of principal upside for the reasons I mentioned earlier. So I think Strife is just a great, secure investment for a fixed income investor, someone who's coming over from, maybe you have a 60-40 equity bond portfolio and you're looking to allocate into a high yield, highly over collateralized bond. Strife is for you. Strike is also, I think Strike's a fantastic product, right? So you have, the way I think about it is it's trading for about $100 right now. You get $8 annualized dividend, and you have a conversion right of 10 shares of Strike into 1 share of MSTR. So the way I picture it is you have about $37 of your $100 of Strike is exposure to MSTR common stock. The other $63 is cash on which you yield the dividend. So in my opinion, I think Strike is actually more undervalued than Strife, simply because that dividend, the way I think about it again, is that dividend is paid on the part of that offering that doesn't represent MSTR Class A because of the convertible option. So you're getting closer to a 12, 13, 14% yield cash on cash if you were going to be holding common equity anyway, but you have to want to hold the common equity. And then Stride's more for institutional investors or people who have serious conviction in strategy and want that really, really high yield. And I'm actually not sure which bond funds. I know there are some bond funds that have high yield kind of over collateralized preferred equity in their covenant. So there are certain people that are really searching out instruments like Stride. For a retail investor, I see no reason not to enter into something like Strife or Strike with what I believe to be more principal appreciation for the time being. In a year, what will I own? If I want a fixed income product and Stride is offering a higher yield, I will be in Stride because I believe in the creditworthiness of strategy itself.
And then to piggyback on that, right now, within the bull market, is the thought process still the same once we have that, that euphoric peak, whenever that comes? It could be this year, next year, 2027, as you mentioned. In a bear market, how should people maybe rethink their positioning and sizing on the way down?
Yeah, I mean, I just think it's so hard to know so hard to tell. And I think there's a lot of there's a lot of indicators this cycle that maybe we don't go as high as people think, but we don't go as low as people think either. So I think there's a real reality of that, as the market continues to mature and becomes more of an institutional asset class. So how do you position? Well, I think all of these products, the way they're trading now, have that dividend, that coupon feature. And as long as strategy manages their leverage ratio, which any individual investor can keep tabs on with Strategy's dashboard, then you have kind of a put, that bond put. Likely that yield gives you downside protection. It's not likely Strife will go to a 15% yield or a 16% yield, or Strike for that matter. So it gives you downside protection. So if you're very, very nervous about a bear market, but you still want exposure to Class A MSTR common stock, I think Strife's your best bet. It's your best bet. You get unlimited upside exposure with a portion of your holdings, but you have that bond downside that can really, really protect you in the case of a bear. And if you believe interest rates will continue to decline, that's actually upward pressure on the that preferred equity itself.
So to kind of pivot a little bit, I saw a clip on Twitter where Saylor was talking about if we can use Stride to support a much higher MNAV instead of using like the MSTR ATM, or if the MNAV in the future would ever go below 1, they would also think about using Stride. Is this something that you would think they would be able to raise more funds in a bear market with Stride to accumulate more Bitcoin? And is that something they also will be able to do? I know in the clip I saw, he was specifically talking about STRD, but do you think STRK and STRF will also be highly, people would want to invest in those in a bear market as well, that would allow them to, raise Bitcoin if their MNAV is below 0 or below 1?
That's a really good question. I think the most important part about Stride, and I think this is the question everyone was asking. So what happens if strategy trades at a discount? And it's very relevant when the Chanos short report came out and people were smashing the stock. It's like, okay, it's a bear market. Everyone wants to short it to 0. What happens if it trades at a discount? They can't generate yield via their common stock ATM. Their leverage ratio is tapped out, because the key with the converts, Strike, and Strife is they all have to be highly creditworthy, over collateralized instruments. So they can't have them be more than about 30% of, call it all debt, right? That's all debt. That debt, convert, Strike, and Strife, can't be more than 30% of the outstanding value of their Bitcoin holdings, just for credit reasons. So in a bear market, if they're tapped out on that leverage ratio, they couldn't in good faith go out and issue more Strike and Strife to buy back their share or to increase their Bitcoin yield. So if they were tapped out on their leverage ratio there, and their common equity was trading at a discount to their Bitcoin holdings, they'd have no way to generate yield. They just have to wait it out. And that would be really bad, in my opinion. And it's something I was really, really concerned about. Why does Strife change that game? Strife changed that because in such a scenario, they don't have to honor the 30% debt ratio rules with Stride, because it's explicitly a lower risk form of debt, because they can miss coupon payments. There are very few examples historically of preferred equities that miss payments, while preferred non-cumulative dividend preferred equities that miss payments while the company's in good standing. But the option to miss the payment in case something really catastrophic happens means that Strategy can issue more of their debt ratio with Stride. So they're maxed out at 30% with converts, Strike, and Strife. They can do another 20% with Stride and when they sell that Stride and collateralize that Bitcoin, they can use those proceeds to generate Bitcoin yield, to buy back their stock and capture that gain. All of that will kickstart the equity again, and we should be kind of out of the danger zone. It's essentially a defense mechanism against short, saying if you short us below 1 MNAV, we will use Stride to buy back our stock, boost it back above 1 MNAV. You're not going to get us stuck there, right? And that's what the shorts want. They want to get them stuck down at 1 MNAV so the Bitcoin yield goes away. And Strategy wants to boost up their premium so they can get the Bitcoin yield engine kicked back on. And Stride, again, is the only way to do that because they can increase their leverage ratio with that product because it sits below Strike, Strife, and the converts.
It's definitely going to be interesting to see when that bear market does come with these new vehicles that are available to the open market. What optionality that gives Strategy on on the way down for Bitcoin, because historically MicroStrategy has outpaced Bitcoin on the way up, so it's been more volatile to the downside as well. As a lot of people seen, in December of 24 up until just as of late. But it's going to be a very interesting bear market to see if Bitcoin has the traditional 70-80% pullback, but because of this new optionality that Saylor has created, they might not get as big a drawdown. Or if it does happen and then MNAV does go to 1 or potentially below, it could be some type of V-shape, spike up in the price in the short term during the bear market. So that's definitely interesting stuff there.
And I think one more. Do you mind if I add one more point on that? The interesting thing about Stride is that since Stride sits below Strike and Strife, if they sell Stride and buy Bitcoin with it, so they sell 1 share of Stride and buy, let's just say for the sake of argument, 0.1 Bitcoin, that Bitcoin added to their balance sheet now sits below Strife and Strike. So Strife and Strike and the converts become even more collateralized when they issue Stride. So Stride is essentially like a sacrificial vehicle for Strife and Strike. And therefore, it's going to have a higher yield. The market will price it with a higher yield than Strife and Strike. However, as an investor, you still may be confident in the future outlook of Bitcoin, and that's why you buy Stride. So I just wanted to add that in there. It improves the creditworthiness of the other instruments.
So let's talk about the impact on some of the traditional, real estate or traditional market investor mindset. With these, fixed income product offerings that Strategy has, could you see the overall investor sentiment change when it comes to traditional real estate? Most real estate investors are getting a 5 to 10% APY when it comes to dealing with, all the other headaches that we mentioned earlier on, such as the property tax, tenant management, repairs, etc. Could you see a pivot in that mindset, an actual shift in capital when it comes to where people are parking their money, instead of earning that yield or store value in traditional real estate, transitioning to some, I guess you would call it, digital property instead of physical?
I'd imagine. I think that stabilization of the volatility is something that a lot of the sophisticated investors were looking for. Because if you run a big fund, it's not that maybe you do believe in Bitcoin, but the mandate of your fund is such that you can't experience a 30% drawdown in a month, right? Like traditional Bitcoin. So a product like Strike would be fantastic, or even Strife, high yielding product with limited downside and limited volatility. And that's just a institutional version of maybe, your mom and pop shop. Like, let's say you're just, a wealthy landowner, homeowner, and you have a bunch of commercial properties, multifamily residential properties, and you don't like dealing with the headache. I mean, you have to first become comfortable with Bitcoin as collateral. Once you do that, obviously Strike and Strife become extremely attractive. But I think it's a big leap, and it's going to take people a lot of time, right? If you're used to seeing the value right in front of you of a multifamily property, it's going to be difficult to convince someone that this magic internet money is in fact the same or even more pristine collateral for to park their investment.
So where do you see Strike, Strife, Stride, any new fixed income products? How much? Because we know Saylor says he's targeting the fixed income market. He says that he wants 1% of that fixed income market. I think it's around 300 trillion. So he wants 3 trillion. Where do you see Strike, Strife, Stride, any new products that may come in the future? Do you think they'll be able to hit that 3 trillion goal? Or is that too bearish? Do you think they'll get more of the market? Or do you think 3 trillion is way too high for these products in the future?
I mean, fixed income's weird. Like, it depends on the price of Bitcoin and Bitcoin's future CAGR. But if Saylor turns out to be right with the 29% CAGR for 20 years, then as long as they continue to issue these over collateralized yields, there's absolutely no reason why the fixed income market wouldn't start pouring into his products. We're seeing that with the increase in ATM activity of Strife and Strike every single week. And fixed income's a lot like people are just looking for secure yield in the fixed income markets. So if he's offering that, there's not a lot of like, if it's over collateralized, stable, reliable yield, fixed income investors over a long period of time won't argue, they'll buy. And so as long as he issues, yields that are higher than the going market rate with a better collateralized, over collateralized product, I don't see why not. They could jeopardize it though, right? That's the risk of owning any equity, is they could over leverage their stock. They could do something to undermine the creditworthiness of the company, and that could be, their downfall. But that religious sort of execution of their Bitcoin accumulation is what has allowed for such creditworthy instruments to be issued in the market. And if they keep on keeping on there, then I see it being possible.
Cool, makes sense. So just to pivot back to strategy a little bit, for the everyday investor, people that may not even fully understand Bitcoin, don't fully understand MicroStrategy yet. I mean, I think people are still trying to wrap their heads around what strategy is doing exactly with all these new products. I'm sure a lot of people are confused that don't have the time to dive deep into what all these, Strike, Strife, even strategies doing with ATM and all the stuff they're doing. And then on top of that, people don't really even fully understand Bitcoin yet, the average investor. So what do you think people need to understand about either Bitcoin or MicroStrategy or strategy to get more average everyday people invested in this product to take advantage of where strategy could potentially be going in the future?
Well, you got to understand Bitcoin. And then once you understand Bitcoin, I think you have to understand the appetite for yield. And I'm not the best at explaining Bitcoin, so I'll leave that to you guys. But I think understanding that there's a real appetite for yield in the market, even if you yourself, because that's kind of the disconnect. There's a lot of Bitcoiners that don't understand like the need for fixed income yield for, retirees or pension funds or, just sort of high net worth individuals or hedge funds, you name it. And so the Bitcoiners don't understand that well, whereas the fixed income investors don't understand Bitcoin. So that hybrid is going to be a really big and important intersection. And I think the yields will speak louder than the words. Like if Strife is yielding 10%, if the market allows Strife to yield 10% for 2 years and it's met every dividend obligation, if Stride is yielding 12% for 2 years and it's met every dividend obligation, like people want to get paid. That's really what they want. And so I think the market will be forced to learn about these sorts of products, much the same as MSTR or IMST. Like people just see the yield and pile in like they're falling lemmings off a cliff. So
there's been a lot of new offerings over the past 6 to 9 months, and I think the learning curve is a never stopping revolving wheel. You have to keep re-educating yourself. Like, okay, you have this down. Okay, now what's this new one? Like when Stride was released, me and Aaron were sitting there like, it's another thing to go down a rabbit hole and spend some hours to see exactly what this is and how it can be utilized and good for the markets. So yeah, to wrap this up, the last question we wanted to ask is, everybody knows that we're in a bull market, and there's a lot of different price predictions out there when it comes to Bitcoin. there's a lot of people thinking that the 4-year cycle, looking more towards the end of Q3 or early Q4, as far as, that, blow off top, if you may. Where do you see the market going from here? Do you believe it's going to be, do you still believe in the 4-year cycle? Do you believe we're going to sort of have an elongated cycle into potentially 26, 27? What's that look like for you?
Yeah, I just have annual compound growth targets, average annual compound growth targets that I keep track of. And anything outside of that, any deviation from that, I believe to be kind of a cycle. So if we were to hit 300K a coin, 400K a coin, I would say, yes, like the 4-year cycle is very much intact, and we could see a massive drawdown. But if we were to finish the year around 150K Bitcoin, I think things would be on pace. And because I'm expecting Bitcoin to compound at right now a little bit over 38%, slowing down to about 30% into 2030. So I just keep track of those long-term compound annual growth rates. If you're above or below, I mean, it's a good time to maybe lighten up, but it's never really a good time to lighten up. But when you're well below those compound annual growth rate targets, that's when you back the truck up and buy a bunch of options. That's at least what I do.
Cool. Well, thank you, Dan, for coming on. Do you mind sticking around for a minute? We're just going to wrap the live stream up here. And
yeah, totally, guys.